I may consume.
The gentleman is recognized.
Madam Speaker, I do rise today in support of H.R. 1153, the Mortgage Choice Act of 2017. And I'd like to start out thanking my colleague, the gentleman from Michigan, Mr. Huizenga, for his tireless leadership on this issue, having ushered this very same legislation through our committee in 3 different Congresses. The purpose of H.R. 1153 is simple: to provide much-needed regulatory red tape relief to our community financial institutions so they can serve their customers, so they can provide them more mortgages. This is a straightforward piece of legislation. It is practical, it is necessary, and, Madam Speaker, it is bipartisan. Now, you may hear today, Madam Speaker, from some of our Democratic colleagues that, quote-unquote, we oppose the bill. We heard that claim in the Rules Committee earlier this week. But I do find it interesting that no amendments were offered during committee markup, nor were any amendments offered at the Rules Committee. And I remind all on the House floor, Madam Speaker, that the Financial Services Committee favorably reported this bill to the House with a strong bipartisan vote of 46 to 13, which means almost half of the Democrats on our committee supported this bill. And in the 113th Congress, Madam Speaker, this bill passed by voice vote, not a single objection. Madam Speaker, this bill would help make home ownership more affordable for working Americans. It will promote access to affordable mortgage credit for low and moderate income families and first-time home buyers. And it does this while continuing to protect consumers. The Mortgage Choice Act is needed because the CFPB wrote a flawed and problematic definition that grossly miscalculates points and fees. And the result is that many mortgage loans, particularly those for low and moderate income borrowers, would not meet the standards of a qualified mortgage and thus not get made. Currently, CFPB rules include affiliated title charges under a 3% cap when determining whether a mortgage is a qualified mortgage, but it doesn't include unaffiliated. This does not make sense. The CFPB rules are detrimental, again, to low and moderate income borrowers and first-time homebuyers, since they are more likely to have smaller loan amounts and thus therefore more easily trigger the 3% cap. That means under the current definition, many mortgage applicants will be denied homeownership opportunities simply because they do not fit into the government box. Or the only mortgages and the alternative available to them might be at far higher interest rates, making them unaffordable for many. In other words, the CFPB's defective definition has ended up protecting many consumers right out of their opportunity to buy a home. H.R. 1153 from the gentleman from Michigan, Mr. Huizenga, would change the way points and fees are calculated by excluding fees paid for affiliated title charges and escrow charges for insurance and taxes. That would therefore, Madam Speaker, increase home ownership opportunities for borrowers by allowing more loans to meet the QM standard. But let's not just listen to me, Madam Speaker. Let's listen to our community financial institutions that we expect to help our constituents. A credit union from Washington explained how this was affecting everyday Americans. They wrote, quote, "A member at our credit union wanted to buy down his rate on his mortgage with cash out of pocket at closing in order to lower the payments for his retirement. However, doing so would have made his total points and fees higher than allowed under the ATR QM, and there was no allowable way around the problem," unquote. And Ford from my native Texas community banker wrote in and said, quote, "The greatest frustration our customers have is our bank's inability to now make home loans. For years, we made loans to people for the purchase of their homes. We would do about one every other week. So it was not a large volume, it was a good service. We always made these loans to keep in our loan portfolio. We never sold any home loans. But with the new requirements for home loans, it has driven us out of this kind of business." It has also taken us out of the construction lending on homes because we cannot risk the risk of a takeout commitment failing. The consumer is the loser. Indeed, that is true, Madam Speaker. As I mentioned earlier, Mr. Huizenga has worked on this bill for the past two Congresses. Again, in the 113th Congress, it passed by voice vote. It passed by an overwhelming majority of 286 to 140 in the 114th Congress. I trust third time will be the charm. I urge all of my colleagues to do what is right for our constituents and to pass H.R. 1153 to provide open access for Americans to purchase a home. I reserve the balance of my time.
The gentleman from